guys, Mike here. So yeah, today we're going to talk about something that has only happened 3 times in the last 5 years, and the truth is, in the 21st century, it hadn't happened that often, okay? And so I'll show you what it is, we'll tie it in with some other data, and I'll let you make your own conclusion, and I'll tell you what I think about it. But understand the next 9 days is going to be crazy, okay, in the market, one way or the other. You're going to have, Jerome Powell on the 4th speaking. They're going to be raising rates. We get to hear about the balance sheet on the 9th. One of you guys pointed this out in the comments to me, that, you're going to have what they call Victory Day, I guess, in Russia on May 9th, which is when they're going to declare maybe that they have beaten Ukraine, and maybe you get de-escalation. We'll see how that goes. And then, of course, on the 11th, the dreaded CPI data, which is either going to show, yes, we've either peaked and we're going to start to move down, or it is even higher than what we expected. Either way, though, we've sold off so much in the market at this point in time. Either one of those three can move us in any direction, right? I mean, at this point in time, you would think it would move us up because we've moved so far down so fast. And so we've definitely been on a very steep decline. And today was kind of suspicious. If you looked at it and you just saw the indexes down, I don't think anybody would have guessed that SPAC stocks and all these other tech stocks were up today, right? But when you look at it, look at what was up, right? I mean, you have your defensives down. You have here's Ark 5%, DraftKings, Opendoor, Teladocs, Roku up 10%, right? All these different tech stocks going up, while the bank stocks were mixed. The biogenomic stocks were up a little bit. Your travel stocks got destroyed today. And then, you keep rolling down. You got steel down, silver down, gold was down, uranium was down. You had crypto start to make a comeback, so those stocks were up. Then you end up going with your safe stocks like your Walmarts, Targets, all that good stuff. They're down. Then you got social media stocks up, your defensive players up. You even got your Chinese stocks up. I don't know how NIO and XPeng are up today after what they reported as far as sales on cars, because they were abysmal. Then you got your fintechs all up, semiconductor stocks all up. And then your FANG stocks and Tesla then were mixed all day. They were up and down, up and down. And as I'm recording this, there's been a huge rally at the last hour of the day in pretty much all indexes and stocks, right? So we end up green for the day. And so now let's get into, what's this indicator, or the chart I showed you on the thumbnail that's only showed crossing that line, that bottom line, three times in the last 5 years. And what does it mean? All right, so hit the like and subscribe button if you get anything out of it. I really appreciate it. And let's get into it, and then we'll tie some other things into it to give you an idea of where this market might be heading, at least in the short term. And so what it is the NASDAQ 100 and the stocks above their 200-day moving average, so tech stocks, right? And as you can see, right now we're below that line again. We kept bouncing off of it for a while and didn't. Then 2020 crash, it went below it. 2018 and 19 crash, it went below it. And so here we are once again. And so the bigger question is, what happens when this goes below that line? Okay, what happens when that many stocks are below their 200-day moving average? And getting below those lines, not easy. It hadn't happened that many times, like I said, since 2000 for that matter. And the key to this one is you have to tie it into other things. When I see that, what does it let me know really quickly? If you know that many stocks, that percentage of stocks are below their 200-day moving average, what's happening in the market? Major sell-off, major fear, okay? And if we look today, what's going on? We finally hit that extreme fear. I was talking to one of the members about this. I said, I don't really see the extreme fear. I mentioned in the video, I see fear, but not extreme fear. And, what happens when you have extreme fear? It's actually a good thing as far as, either buying dollar cost averaging in or getting a relief rally when you're in a market like this. Because you can see with all these numbers, I'm going to write these dates down, but you can see when there's that extreme fear, we get nice moves up, okay? And I'm going to show you the index doing this. The stocks go up even more. And what happened when we go to the chart? Rip your face off rally on March 14th. You had extreme fear going on, so it kicked in. And then when we keep going back here, the next time we see it is January 26th. Had a relief rally of 9% right there. And then when we go back, and you see the RSI at the bottom right here, and it's usually getting to that oversold territory, right? December 2nd or 3rd, somewhere in there, you can see it wasn't even down the RSI. End up having a sell up, sell off, and closed in by the end of the month at around 7%. And then we go over to October 5th, where we had extreme fear. You end up getting a huge rally right here of around 15% in about a month and a half on this. And then the last one, you can see right there the RSI, you see it. And then the last one was around like August 18th. And August 18th is right here. And we end up getting a nice little rally of 6% in about 22 days. And of course, you can't just tie these in by themselves. You could if you want to. I like to tie several of them in, right? So we got a 200-day moving average in the toilet right now for stocks on the NASDAQ 100. You got extreme fear. And then what else do we have here? You have your put call ratio here. And you can see when it gets above that top line, that's when you usually get trouble, okay? And I put this out to the members about 10 days ago, actually, as you can see right here. And the last few times this has happened, you can see going back January 21st to the 26th, you get 3% sell-off in one day, followed by a dead cat bounce of 8%. February 15th, 10% sell-off. March 3rd, 8% sell-off. March 29th, so far 12% sell-off, but obviously we're down even farther than that now. And when we just look at when this put call ratio happens in more detail, you can see right there, once it crossed back over, down about 7%. It happened again even before that when you look at the chart here. And March 29th, when it started to happen, around 11.5% right there. And we look back over here on January 27th, you can see about a 5% sell-off in 6 days right there before you get a nice bounce. And then if you look at the VIX, you see where we're at right now, right? I mean, that's really high. When you get 35, that's extremely high. Anything over 30 is high. When you look back here, you can see it rarely gets up there, right? At these kind of levels. And so you see what happens when it gets those levels. You see a major fall off, which means you're getting one of those relief rallies going on. And usually, that's why it's these rip your face off type rallies, because the volatility is so high. And you can see it broke through that trend line since the March 2020 crash when I drew that one. So, you know, whether it's going to go higher, we don't know. But if you look at this chart, you can see it just doesn't get this high. If you go back to 2019, this is really, really high. And that's why you're seeing these major swings in both directions. You saw 1 2 days, I just mentioned, we're in the red, and all of a sudden, boom, in an hour, we're swinging back over percent above almost in all the indexes. And so I don't know what you see when you look at all that data, but when I see all that bearishness, when it gets so bearish, what does the chart show? You usually get a relief rally. As far as, you know, people trying to call the bottom, you're going to see the bottom for a while. I mean, to be honest, because why would you, right? If we just get into a tightening process, you got all this other stuff going on right now, you know, why should there be the bottom? But are we going to have several bottoms? Probably so, right? We've already seen that. Every time we think we got a bottom, we get a new bottom, and then a new bottom, and then a new bottom after these relief rallies, right? And so I think just having that mindset, this isn't 2020, this isn't 2021. Will we set an all-time new high at some point in time? Probably so, because that's what the market does. It's forward thinking, so to speak. But, you know, the Fed, if they continue with their process, and we'll find out a lot on Wednesday, you know, we'll see what they're going to do. But if they do actually follow through with their plan, they will break something. They always break something. That's the way it works, okay? And so, again, their job is to try to bring down demand. So in your mind, if you think to yourself, if that's what they're trying to do and they succeed at bringing down demand, what does that mean for earnings for these companies? Not good, right? Because you're not going to be selling as much because there's, you know, less earnings. And what are we? We're a 70% service economy. That's what we are, okay? We don't make a lot in this country anymore. And so that's restaurants and cruise ships and cars and all this other stuff. You know, you're already seeing this in the real estate market, right? Demand is starting to come down because why? The rates have already gone really high, right? They're back in 09 territory, right? The prices have gone really high. And so that's what we got to see. For me, I'm not looking for the bottom. I'm just looking for a temporary bottom for a relief rally to try to make money off of it. That's really what this is about, right? I mean, this is a trader's year for sure. I mean, traders are killing it this year. Active manager, which I'm still researching this volatility has helped them this year with their returns, okay? Because they're shorting the heck out of stuff, riding it up, because they can do that because they have a lot of funds, right, that they can deploy at one time to, you know, help move this market up. And when they start to push momentum up, what other people do? They follow that momentum, right? And all of a sudden it fades out, and down we go again. So we'll see. You know, I mean, obviously, usually in an election year, especially May through September is not good. We got that going on too, which, you know, that's kind of gone to the wayside because we got so much other stuff happening. But to me, you know, let me know what you think. But, you know, there has to be a relief rally because the stock market does not just keep going down and down forever and ever. There's always a pop, and then you might see another drop, right? And so we'll see, because why? The big dogs, the big stocks are starting to falter now. Even with good earnings, they are faltering and being sold. But, you know, unfortunately, people think we get these relief rallies, and you never know. You'll get one rally, and it might be one of these huge rallies, right? You see moving up, but we'll have to see on that. So I just want to give you that data to see, and you say, yeah, I mean, we got to be nearing some temporary bottom to get a relief rally up. How far that rally goes, who knows, right? That's when we'll follow the same kind of indicators to see on the top side where it's at. So hope you got some out of it. Let me know what you think in the comments down there. I appreciate you always watching, sharing the video and all that stuff. And I'll end up seeing you guys tomorrow.